Picture this. I'm nursing a lukewarm cappuccino at my desk, scrolling through the morning headlines when one number jumps off the page like a kangaroo on a trampoline. $325,000 for a single Bitcoin. Now that's VanEck's new target. Now, if that didn't make your eyebrows try to high-five your hairline, wait until you hear what it means for XRP. So strap in, because by the end of this ride, we're going to explore why some analysts think that our beloved underdog coin could flirt with $23 and what it might look like for the rest of us still counting Satoshis like pocket change. Let's kind of tear open the kind of piñata of price predictions and see what candy falls out. So here is the scene. VanEck, the asset manager heavyweight that usually wears a kind of pinstripe suit to work and keeps an eye on the ETFs, just kind of lobbed a kind of moonshot of forecasts that could make even the most caffeine-jacked crypto optimist spit out their latte. Now, we're talking about Bitcoin at $325K, Ethereum cruising at $22,000, and Solana stretching to a cool $3,000. Now, those kind of numbers, they make you kind of check your calculator to be sure that it's not April Fool's Day, or that you didn't accidentally read the market cap instead of the price. Now, each time that one of these megaton predictions drop, my inbox turns into a holiday parade of messages. Nick, is this for real? Nick, should I mortgage my cat? Nick, do I buy now or wait for a dip the size of the Marinina Trench? The panic, the FOMO, the hope, everyone wants that one perfect gleaming answer. But here is the problem that we all bump into like moths at a porch light. We crave certainty in a market built on probabilities. Right? We're standing at a roulette table, betting our chips on blockchains reds or blacks, praying that the dealer doesn't spin us into oblivion. Now, before we dig further, here's a quick pit stop. If you like kind of chewing through this kind of intel with folk who would roll their eyes when you kind of say, you know, hash rate over kind of brunch, well, you want to jump into our free educational Discord server. There's a link down below. It's kind of where I brainstorm, backtest, and occasionally post memes of Satoshi riding a roller coaster. Okay, back to the numbers. VanEck's projections for Bitcoin, 325,000, represents roughly a 3.1x from its current price of around $107,000 at the point of recording. That's a leap, yes, but let's put it into context. In late 2020, Bitcoin sat at around $20,000, and people kind of thought $50,000 sounded pretty loony. You fast forward and we blew past 60K like it was a speed bump. Now, markets, they have memory shorter than a goldfish on TikTok, but what was unthinkable yesterday becomes, of course, well, tomorrow. So Ethereum at $22,000. That's almost a 9x jump from roughly the 2.5K it is today. Now, ETH always kind of plays the slow and steady chess game, right? Dev upgrades, layer 2s, gas fee reforms. But when it runs like someone left the stove on. And Solana at 3K from its current $200 neighborhood, that's a 15x sprint. Yes, the same chain that we roasted for downtime jokes in 2022 might moonwalk past most altcoins if VanEck's crystal ball is, you know, tuned correctly. Now, this might just shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. Your investments, of course, are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video today is for entertainment and educational purposes only. Now, here is where XRP sneaks onto the dance floor. Now, historically, XRP is the kid in class who finishes the exam last and still passes with flying colors. She's tardy to every rally, but when she moves, it's kind of ballerina graceful. Now, analysts kind of keep reminding us that XRP tends to lag until Bitcoin dominance slips and altcoins kind of get 5 minutes of fame. Now that phenomenon, which is known as altcoin season, is like college spring break for the crypto market. Everyone kind of cuts loose, sometimes irresponsibly, and wallets come back, sunburnt or glowing. So let's crunch the napkin math then. VanEck's 3-coin average upside clocks in at around 966%. If XRP mirrored that from its current $2 and some change, well, we're eyeballing around $23.35, a crisp new all-time high with a kind of gold foil wrapper. Now you might be thinking, great, I'll buy a Lambo and name it Ledger, but hold on to your horsepower, right? Numbers on a screen are one thing. Getting there in the real world is a trek with more kind of switchbacks than a mountain biking trail. So here's the first challenge, and it's regulatory fog. XRP's long-running spat with the SEC is like that one neighbor's kind of argument that you can hear through thin apartment walls. It just keeps on going. While recent court decisions have given Ripple a few fist bump moments, uncertainty still hangs over like a half-deflated birthday balloon. Now, if those clouds finally part, hello, settlement, or even a decisive win, XRP could, shed its regulatory shackles and sprint. Without that clarity, it's kind of like racing in scuba flippers. The second challenge here is market psychology. Now, I talk a lot, or at least talk to a lot of retail investors who buy green candles and sell on red ones. Human nature, right? But if we kind of do rip towards $23, guess what happens at $5, $10, $15? It's profit taking. Now, the kind of rocket, it will lose some of its thrust as early birds cash out. It's kind of like trying to keep a party going when the pizza arrives late. People start kind of ghosting before the DJ even kind of drops a beat. The third challenge then is liquidity and adoption, right? Ripple's touted on-demand liquidity corridors, remittance partnerships, and talk of central bank integration sounds fabulous. But adoption kind of takes time, right? Money kind of follows incentives, and those are tied to regulatory clarity, user-friendly ramps, and corporate buy-ins. XRP hitting $23 isn't purely math, it's sociology, I should say, law. It's also economics playing, well, musical chairs. Now, here is where my little story gets a little personal. Last bull run, I ignored a relatively obscure DeFi coin that's sitting quietly at $2. Now, I told myself I'd circle back, and it went to 44 while I was busy reading the white paper. My point here is quite simple. Move slow and check every box has merits, but analysis paralysis can cost more than a train ticket bought on the same day. Balance is going to be key here. Some swagger, some skepticism, yin and yang of crypto zen. Okay, so speaking of balance, let's talk about tools. I keep two, right? My journal for tracking emotions, yes, seriously, and Blofin's crypto exchange for executing trades. Full disclosure, the Blofin link below is an affiliate link. So if you sign up, the channel here earns a tiny slice and my caffeine habit cheers. Now, Blofin's interface is so clean that even my, technophobic aunt and uncle, could actually navigate it. And their kind of fee structure doesn't eat your lunch money either. All right, stat lovers, let's zoom out. If Bitcoin does, escalate to $325,000, its market cap balloons to about $6.4 trillion. Now, in that scenario, Ethereum at $22,000 pushes roughly $2.6 trillion. Add Solana at 3K, and we're talking an extra trillion plus. Total crypto market cap would leapfrog the combined GDP of several G7 countries. Skeptics will, of course, ask, where does that money come from? And remember, markets don't require every investor to pour fresh capital. Market cap is incredibly misleading. Valuations grow as existing coins appreciate, but we still need a significant amount of new capital. Institutional funds, several sovereign kind of funds, wealth funds, and, retail FOMO kind of perched on the sidelines. right? A few 100 billion flowing in could in fact achieve these numbers. So here's a fun metaphor then, right? Picture the crypto market as a carnival then, right? Bitcoin is the Ferris wheel, visible from miles away, steady, and your grandmother approved, right? Ethereum is the roller coaster. It's, techie, it's thrilling, a little intimidating if you haven't had your lunch yet. And Solana is the shiny new slingshot ride, high velocity, occasionally stops mid-air for maintenance, right? XRP, well, it's the haunted house. Everyone's cautious. Half the people are scared and no one agrees whether the ghost at the end is fake or real. Now, regardless, once the line starts moving, everybody wants in. Okay, let's chart a quick scenario timeline then. Bitcoin creeps past 150K. Mainstream outlets, they start running "it's not too late" or "is it too late" headlines. And institutional desks, pension funds, insurance giants, they feel pressure from clients and allocate a slither of assets. Ethereum kind of benefits from deflationary tokenomics and DApp growth, right? It crosses 10K. Now, at that point, altcoin season lights up like the Vegas at dusk, right? Bitcoin dominance kind of slides from, let's say, 47% to 35%, and capital rotates into high beta plays. Solana deepen and NFT ecosystem expand, right? Pushing price multiplies, right? And of course, XRP is still yawning at maybe $3. Then suddenly, traders notice the divergence. Liquidity floods in, right? We jump from $3 to $7, consolidate, break $10, and sprint to 20. Profit taking nibbles it back to the kind of high teens. And we start calling it the new normal until the next narrative wave. It kind of sounds cinematic, right? But what's the kind of climax? Imagine Ripple winning a kind of definitive legal victory, right? Judges kind of gavels down, right? Headlines scream XRP not a security. Exchanges that delisted or restricted XRP back in the day reopen the taps. Liquidity deepens like a kind of rainstorm kind of filling a dry creek bed. Now, that legal clarity, it could actually be the rocket fuel to nudge XRP from teens to that fabled $23.35 mark. Without it, we may still kind of stall around the single digits, waiting for, well, just another catalyst. Yet, victory lap or not, the danger zone never disappears. Hacks, macro shocks, black swan events. Pick your nightmare, right? One tweet, one policy change, one contagion event, and the house of cards tumbles. And so that is why, as much as I love pie in the sky scenarios, I keep my feet firmly on the ground. I dollar cost average, I set stop losses, and I talk to boring accountants who wear beige ties. So if you're kind of nodding along, wondering, okay, Nick, what can I actually do besides daydream? And here is my checklist, right? Gut check the risk, right? If tomorrow your portfolio is halved, could you still pay your rent? Then there's diversify properly, right? Consider baskets, not single eggs, tech, traditional equities, maybe even that dusty bond ETF. And you've got to educate yourself daily, right? Join the Discord. Seriously, it's completely free. And someone's always kind of awake posting a chart at, well, 3 a.m. You've got to use credible platforms as well. Blofin's an option, and yes, an affiliate link down below. Yada, yada. We've been through it. And the next one is to set rules before emotions, right? Decide exits and entries on a calm Sunday, not during a green candle stampede. Now, as we kind of coast towards the end of our little saga here, here's the big takeaway that kind of kept buzzing in my head all week long. Price predictions are like weather forecasts in the Sahara. Mostly sunny, occasional sandstorms, rarely snow, right? Useful, but never actual gospel. Now, VanEck's thesis is just a simple scenario. It's not a destiny. Your job, my job, is to interpret, prepare, and stay humble. Markets don't owe us anything except a daily reminder that greed and fear are terrible co-pilots.